Hi, this is Ian Coleman from PIA First. It's Sunday, 12th of April. Going to look at dollar yen. Now we've seen quite an aggressive sell-off over the last 4.5 months, and that was from this 150 area. Now if we look at the chart moving back, we always like to break down the time frames. So we look at the monthly chart, weekly chart, daily chart, and then break down into shorter time frames to try and get an intraday and a medium-term bias. Obviously when these two biases line up is when we get the best moves in the currency pairs. So euro yen monthly chart, we could see that 150 was quite a pivotal level going back 1996 and then 2007. Then obviously making a high of 149.77 back in December. We've seen a decent sell-off. We're looking for this sell-off to continue. Daily chart, and we look to be in a wedge formation, but there's plenty of scope for further selling. I think we're going to break the previous low in quite early trade next week. DMARC has posted a correction count on the 4-hour chart, so we might see a mild recovery on Monday morning. However, that would just be another opportunity to sell into this quite aggressive move to the downside. It should also be noted that DMARC has posted an exhaustion count on this candle, okay, a daily exhaustion count on the 9th of April. However, this is also a part of the count. This was actually the 7 count out of the 13 count, okay, and DMARC, if you use DMARC indicators, basically you take the lowest candle in the formation, you take the high and the low, and you then take that many pips off the low of that candle to give yourself a stop or a projection of where this currency pair could go to before it reverses. So the actual stop on that DMARC exhaustion count is not seen until 124.75. The base of this formation, this ending wedge formation, we'll just get crosshairs, okay, at the moment is around 125, the figure. So sort of obviously we've got to take the days into account as we're moving lower in this formation. So there is chance that we could get close to 124.75. So the bias, like I said, is for a break to the downside and then a move lower towards 125, the figure, which is the base of this ending wedge formation. And it's also, if we go to the monthly chart, we take the last support area, that's actually coming in at 124.86. So like I said, our bias for next week is to sell into rallies down towards 125, 124.75. We then expect correction higher, maybe some choppy price action, could even go all the way into May before we get an eventual break to the upside. And it also lines up, it's also correlated with our views on euro dollar and dollar yen. Obviously dollar yen, scope for some mild buying early in the week to sell into. Euro dollar, the bias is still to the downside. Okay, thanks guys, and I'll speak to you again soon.